Investors to another episode. April 3rd, giant sell-off today on the S&P, on the Qs over tariffs. At least that's what they're saying. Really what the news is the weak consumer, which is the headline for the past 3 years, though really under and reported everywhere you look. You won't see that in the mainstream media. You'll see very strong growth in consumer sentiment and consumer buying, and retail sales are up and whatever. All these headlines are just fraudulent headlines. The real underlying economy is far worse than what we're seeing. We're seeing a giant retracement, supposedly due to the tariffs, but really, this is due to the lack of American innovation over the past probably 4 decades. So that's not going to correct itself overnight. So that being said, I do think that we're not entering necessarily that oversold territory. I think I want to see this kind of area here where it's testing this low here, this line here. So tested this low. I think we're headed for another one where we retest over here somewhere, get close to it and test this 200-day moving average, and then I would say you can go whole hog and start buying things if we see a little bounce off of this, because I do think that there'll be some panic to the downside. We'll get this reaction low at 490, bounce, go back up to the 50, and then there'll be another bigger downward trend afterwards. MACD is bearish, of course, as we said in previous videos, is bearish pattern. This is really the same pattern developing here. Got a head and shoulders, and down. So we haven't hit bottom, not close yet, because if you look at each of those prior lows, we got negative 15 on the MACD. So we're looking at maybe even negative 16 or so on the MACD, which will bring us right back down to 500 here in the SPY, or roughly about another 5% downward. So we're looking at overall probably roughly between, let's give it a 10 and 20% correction in S&P 500 and SPY, and then I expect to bounce, retest this 50-day moving average. Maybe we could bump above it, just like in the previous sell-off, or we'll just touch it, just like this one. We'll have a reaction low, and then we'll just touch it, and then we'll come back down for a deeper low, which I had said in my prior videos. In the SPY, I'm looking at in this zone between like 460-ish in the SPY. Could we get a little lower? Yeah, we could get a little lower than that, especially if we break this line here. If we break that, then all bets are off. I do see a megaphone pattern here. That could have been a bullish megaphone, right? Or it could be that there's one more reaction low happening somewhere over here that hasn't happened. That's going to be an even bigger crisis, has yet to emerge, where we'll see a basically absolute 90% correction on the S&P 500. I've said that we're in the Elliott wave. We have 1, 2, 3, 4, 5, A, B, and then C correction. And there's multiple ways to draw these waves, but that's kind of where I see it happening. We're way overheated in the S&P 500 and the NASDAQ, but you have to recall that a lot of the companies were underperforming, got taken out. So like if you look at more consumer-centric names, those lead to downturns, as well as the transports have been doing absolutely terribly for a while now. This is not a news event. We've been seeing UPS descend over the past, let's say, 2 years now. So transports are leading our way downward. We're at 100 now in UPS. At some point we're gonna bottom. Okay, so like I have a target of 80 on UPS. If we get to 80, I think it's a very long-term buy. It's definitely investable at 80 bucks a share. So I'm definitely keeping my eye on UPS. This is a company that will not go under, bankrupt or anything. It's just too ingrained in the government and other things. Um, Whereas people will look to RH, for example, and the reaction low put in today. I think we have probably a little bit further to go. That's my opinion about RH. I don't know how much lower we're going to go, but I have a feeling that I would recommend that we be careful here because it broke this line. Looks like it might have retested. I expect maybe another low coming here in RH, probably in this zone, the 100 or 80 zone, even in RH. Now that it's broken that long-term trend line, it's not investable anymore. Um, just like Nike, we went over Nike yesterday and the day before, and we noticed that it broke a long-term trend and is now uninvestable. We said this yesterday before the big crash today. So, the days prior to that, wanted to watch that to see if it would break it. It did break it, so we're staying away from Nike. It could go much lower. My target for Nike would be like 30. Between 25 and 30, it become investable again, which represents basically an 80 to 90% sell off from the highs, which is what you see in a bear market, which is what I believe that we are in. Definitely, certain sectors are leading the bear market. We see that in Five and Dollar Tree, in Advanced Auto Parts. We're seeing it all over. Okay, so the consumer's in trouble. You can't raise prices on things that drastically without severe economic consequences. So, and that's what we're seeing. So, where's a good place, you might say, to hide out? Well, overseas is one of them. You could hide out in the TLT, as we said before, or the TMF if you're more risk taking. But really, TLT is and has been a very long term buy here. I think TLT is investable at this point in time. Um, could it go down a few percentage points? That's totally possible. But I think that the upside in TLT far outweighs the downside in TLT. So the force of the Fed will come in and cut rates, and we'll see this start to spike higher over the coming years. Okay, this is more of a long-term forecast, and I think that we're going to come up and probably retest this 200-day moving average here. So that's what I think is going to happen. Eventually, I believe we'll get back up to probably 130, 140 on the TLT, which represents maybe a 50% increase in the TLT over the coming years, maybe 2 years, which is not a bad thing. My more bullish argument is for TMF. TMF has been decimated as it's a long 3x long the TLT. My forecast for TMF is also to rise with the TLT, and I think we're going to hit 200 on as a long-term target on the TMF. Now, in between, there's going to be a lot of volatility. I can't tell you which way it's going to go at this point. I went over short-term analysis before. We got multiple gaps to the upside that need to be filled, and they will be filled. But there's one gap in particular, looking at long-term, that 214 gap, I think will be filled. So we stay long and strong, TLT and TMF, or lay back and collect a dividend on a SGov on their T-bill and chill. So I'm all for that T-bill and chill. So yeah, we got these poor economic indicators. Quite frankly, they've been in place for a long time, even prior to Trump announcing today. That was just a catalyst today. It was not just. It was not based on just Trump's actions. His actions caused the market to go down in the short run, but these underlying issues have been with the market for the past 30 or so years. To undo the bubbles that have been formed in the market is going to take a lot of time and a lot of fortitude. And I don't think the Fed is going to let it happen. I think they're going to step in with giant rate cuts probably later this year once they see the writing on the wall. And we'll be back to essentially zero on the zero Fed funds rate, which would bring back all the mortgages back down to the 4 to 5% range and make things more affordable again, which is going to be great for a lot of people that have the cash, but poor, it's not going to be great if you don't have the cash to buy things at that point after everything has been pretty decimated. But you want to buy quality companies like Nestle and things like that in this environment. A couple I talked about. Hain got smoked today. It's in a basing pattern. It squashed that MACD, so we saw it go down rather than up. So poor follow through on Hain. Said it's in a basing pattern. I want to see this break higher first, so which I do think will happen, but it's just a matter of time in Hain. Farm also went down 8% today. My target short term in farm is 180. If we get back down to 180, I am a buyer of farm, but otherwise I leave it alone. So unless you want to put a very small position on it, that's okay. But otherwise, I would just leave this one be. So let's look at the big one, NVIDIA. NVIDIA, yeah, so we're seeing that this will come back down, I believe, to this zone, the 55 zone. It looks like a very bearish chart. If we look at the 1 year, we see a death cross. Yeah, usually we do have a pop when we have these death crosses, and then it comes back down afterwards. So we did have the pop. We sold there in the SMH, and then we came straight back down. Okay, I think we're headed again to this 50 zone over here. So this zone over here, that's where I think we're headed in this one. And that would be about a 50% haircut from where we are today. And then if we get there, I do think NVIDIA holds long-term promise. So quick update today. I just wanted to go over some major stocks and headlines with you guys, and let the markets be with you. Like, subscribe, and comment, and take care.